of the Financial Services Club, a UK-based networking group. Good afternoon, Chris.
Hi.
Now, this part of Northern Rock was dubbed the Bad Bank, potentially toxic debts there, but it seems things could turn out all right for it after all.
Well, I think this is the outcome we'd like to see with all our banks long term, which is that what was called the bad bank is actually because the government ring-fenced what they thought were the toxic loans that wouldn't get paid back into this run-off situation. And in fact, those loans are not as bad as they thought. They are being paid back, and debt is being able to be securitised more cheaply in the wholesale markets again. And as a result, the asset resolution, as you say, who runs this part of the bad bank, are finding that they're paying back the government faster than expected.
Much faster than expected, which is pleasing for taxpayers. But is it ever going to be in a position to sell off? Is it in a good position right now with those profits?
Well, the UK Asset Resolution organisation running this bad bank say that within the next 12 to 15 years, they believe the government will make something like 11 to 15 billion pounds profit from the assets of this bank, because they will pay long term and they're not going to be in the default situation they thought they were going to be in. That's good news, and again, it's what we'd like to see with all of the bank situation across the UK.
Now, you talk about toxic debt, and the defaulting on mortgages is what we're referring to with that. Does a low interest rate environment, is a low interest rate environment crucial to maintaining that stability with mortgages?
Oh, it's definitely helping. I mean, there's something like 722,000 mortgage customers with Northern Rock at the moment. It's still the sixth biggest large lender in the mortgage markets in the UK in this bad bank area. Of those, 90% are paying back on time. They're not in default. They're doing exactly what you would hope a good mortgage residential customer would do. They're paying back their mortgages. And even those that are struggling are not that badly in arrears. There's a very small amount that are over 3 months in arrears, but it is very small.
Now, the government was recently criticised for selling off the good bit of Northern Rock to Virgin. How did it sell the wrong bit then? Should it have sold the bad bit, Northern Rock Asset Management?
Well, I think they'll make more money in the long term out of the bad bit because, as we've said, the toxic debt is not that toxic. The good bit they sold for good value. Deutsche Bank valued the Northern Rock good part, which is the branches where you have good credit risk customers that were sold to Virgin Money in November. They valued that for about between 800 and 900 million pounds, and in fact Virgin, if everything is paid in full, will have paid over £1 billion. So that was a good sale.
Okay, Chris Skinner, thank you very much for joining us here on the news channel. Before I go, let's just take a quick look at how the markets have been getting on. And there's a Friday